Hello, everybody. Welcome to Wiley Solution Walkthrough. This is Accounting Tools for Business Decision Making. This is the 8th edition, problem 20-2. Textbook authors are Paul Kimmel, Jerry Wygant, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, let's get to it before we say thank you to that bus driver. Okay, so we've got over here Shatner Manufacturing. Wow, we're really on a Star Trek bender today. Is trying to decide whether to continue manufacturing a part or to buy it from an outside supplier. The part, called Cisco, is a component of the company's finished product. The following information was collected from the accounting records and production data for the year ending 12/31/25. So this is in the future. This is like 3 years from now. Wow. So 8,000 units of Cisco were produced in the machining department. Variable manufacturing costs applicable to the production of each Cisco units were direct materials, direct labor, indirect labor, utilities. And over here, this is going to be 480, 430, 43, and then 40 cents. My units. Okay, so over here. Okay, so right over here, these are the direct costs. Now we get down over here to other parts over here. So fixed manufacturing costs applicable to Cisco were. So basically, we're now going to show over here. So we've got fixed, direct costs, depreciation, property taxes, and then utilities, allocated, not insurance, allocated, direct costs, or allocated costs, which are fixed. This is going to be depreciation, property taxes, and insurance. So this over here is 2,100, 500, 900. My depreciation is allocated as 900, 200, and 600. So my total costs right over here is going to be 84,640, right? Or roughly about 1058 per unit. Okay. So over here, so the lowest quotation for 8,000 Cisco units from a supplier is 80,000. Okay, so over here, this is build ourselves or self-produce, purchase outside. So if we purchase outside, cost would basically be 80,000. Now at the same time, okay, if Cisco costs are purchased, freight and inspection costs will be 35 cents per unit. Okay, so freight. And so the cost of this over here is going to be, we've got 8,000 units. The cost of this by building outside is going to be 10, or by purchasing outside is going to be 10. But we're going to also have freight and inspection costs of roughly 35 cents per unit. Okay. or 2,800. The other thing it also tells us too is that all variable manufacturing and direct fixed costs would be eliminated. The allocated cost will not be eliminated if Cisco is purchased. So if Cisco is purchased, its fixed manufacturing costs allocated will have to be absorbed by other production departments. So what we're going to do over here is we're still going to have the allocated cost, because in order to make these two comparable, right, I need to basically, show those same costs going through and coming through. So over here, this is going to cost me 900, this is going to cost me 200, and this is going to cost me 600. So over here, I've got a total of 84,500, and there's something that I'm missing because my number is off. So just give me a moment. Sorry, guys, I just started reading this a little bit more carefully, which I should have been doing before. If their units are purchased, freight and inspection would be 35 cents per unit. We got that part, but we missed this one. And receiving costs would be 1,300 per unit, or 1,300 per year. So my receiving is at 1,300. Okay. Now, the difference is between these two is, so this is outsource. So over here, if we outsource, cost is going to be 85,800. We build, self-produce. This is going to be over here at 84,640. So it's going to cost us 1,160. Now, what I like about what they do here is that, well, this is a really good way for me to check my work. Of course, you won't have this on the exam, but just remember to go through and check your work carefully. I make mistakes too, by the way, people. So over here, based on your analysis, what decision should management make? Well, because it's going to cost more, then we shouldn't be, we should not outsource it. Now, the one thing I also want to say is that if we outsource something, one of the things we're going to lose is control. Is this a very important part to us in terms of our production? If it is, I may not want to outsource it, right? I may, as we're kind of finding out with outsourced things that go outside of the United States right now, sometimes that doesn't work out and we got to build back better, right? Whatever, which one of our, I'm not sure what president said that, but and anyways, in any event, we got to be careful, right? So not only you want to be looking at this from a dollar perspective, right? But by outsourcing this, what is it going to go through in cost? Now, if we've got something that's, like Amazon Web Services, I mean, like Netflix, they are on Amazon Web Services. They don't have like their own servers just because they do it better. So again, you just have to kind of really like look at your situation. Okay. Now, over here, would the decision be different if Shatner had the opportunity to produce 3,000 of net income with the facilities being used to manufacture Cisco? So if that was the case, then what you would say, well, if we outsource it, then we're going to have savings of 3,000. So we're going to be able to save money by going through and doing it. And now this is going to be at a cost. Let me actually do this real quick. Okay, so let's copy this down. So if we have this over here now, we're now at a savings of 1,840. But again, I would really, when you're talking about non-financial factors, and we're going to look at their solution in a moment, but again, it's not that much of a difference between the two. You don't want to just rely on the numbers, especially if it's this close. You have to be extremely mindful, right, of not just the financial cost, but the non-financial implications of your decisions. And if we outsource this and it doesn't work out, you're going to be blamed. Okay, let's go over here and let's take a look at our solution manual. And let's see how we did. Okay. So this is a good thing for you to see, because you're going to see how I go through and do things a little bit differently. Actually, it's kind of the same. Make Cisco, buy Cisco, 1160. And they get into this opportunity cost crap. I hate this stuff. All the textbooks do it. I think it's there to make me angry, but I'd rather just say, well, this is really going to reduce. If you're, instead of putting it here, to me, it's like, well, this makes this outsourcing cheaper. But again, we're getting to the same result. So if you want to do it like Tchaikovsky does and the opposite means opportunity cost, then go for it. Okay. So the adverse effect on employees if Cisco is purchased, you're going to have to do some layoffs, right? That's never pleasant. And by the way, if you lay somebody off, you aren't going to be able to necessarily replace them or their skill that quickly, especially in 2022 when we have a huge labor shortage of skilled workers. How long will the supplier be able to satisfy the quality control standards of the price per unit, right? Because if someone underbid to get the work and then they pull the old fast one, are they reliable? Are they financially stable? Do they know what they're doing, right? And whether the supplier will deliver the units when they're needed by Shatner. Now, we look at the Ford Motor Company and you saw those rows of cars sitting on some speedway, and I don't know if they're still sitting there or not, but they were missing the chips. And apparently when they cut their order to Taiwan, and then Taiwan said, okay, you want to cut your order, that's great, I'm going to go do something else and try to ramp back up production, that's an absolute disaster. So again, you have to look at not just the financials, you also have to look at other factors as well. So in any event, I want to thank Wiley for allowing me to do this, to make these videos. It's extremely appreciated. Thank you, Wiley. And please don't forget to like and subscribe. If you're looking for other solutions, please feel free to ask for them in the comments. I look forward to seeing you on the next video. Have a great day.